Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Hope you're doing well. Like you just saw there, check out DNA Funded. If you have not already, there's your chance to get 20% off for a limited time. Okay, so we got some stuff to look at. We've got unemployment claims coming out shortly. Let me just pull this up. So unemployment claims expected, I believe, to continue to decline. Forecast for 227. Let's pull that up. If I go into my labor statistics, where you at? Let's see, labor market, unemployment claims. So we're forecasting to come in at 227,000. So we are expecting unemployment claims to remain, well, recently they've been trending down. The question becomes, are they going to continue to trend lower? ECB held rates. Was that today? Did I miss that completely? Oh, yes, it was. ECB held interest rates largely as expected here. PMIs, let's take a quick look at PMIs this morning as we do get some more PMIs later this morning for the US. Let's see. PMIs out of Europe, German numbers coming in pretty much in line with expectations. Same with French numbers. The UK PMIs, let's see if this is updated in the Edge Finder. Should be. Let's go to PMIs for UK. Yep. Oh, our PMIs are not in there. They're still updating. What else do we get? Do we get unemployment rate? That was okay. That was a couple days ago. So anyways, PMIs out of the UK were slightly worse than forecasted. Services PMIs were a little bit soft. They did revise the previous number up a little bit. Manufacturing was a slight beat for UK. Let's take a quick look at the British pound in response to this. British pound slightly lower this morning. Euro slightly lower this morning as well. Is the dollar up today? Dollar is up today just a little bit, nothing huge. Stock market indices slightly soft this morning, but pretty much unchanged. We did get some earnings reports yesterday. Google beat on the top and bottom, a stock that I own, and I'm thrilled to see it. Stock did very well, up 3.8% in the pre-market. Very nice. I also did a trade on Google for the earnings report. I shorted puts right before the earnings, which ended up being a very good trade. So congrats to anybody in the VIP room who traded Google with me. I know this channel, we don't talk too much about stocks, but I will be covering that on my second channel, Trader Nick Stocks. A trade that I am on and talking about in this channel quite a bit is the oil position. Oil trade, just still sitting at break even. Nothing too exciting about this one. Still just sitting in it, and I feel okay holding this trade. Let me just see really quick where are we at top setups wise. Do we still have oil looking good? Nope, oil fell off the list. Let's see what's going on with oil. So if I go to US oil, getting a neutral score at this time, trend sort of fell off here. So yeah, you can kind of see we're in just a very, very choppy range bound environment for oil. My thought process on this is that you very well could continue to see the support level hold, but I still like the risk to reward on oil. When I took the trade, it had a +6 reading, I think, on the Edge Finder. So I'm just going to stick with it. If I get stopped out, I stop out. Yeah, Lee, Tesla, disappointing. The only good thing for me on Tesla is that I shorted calls. I own the stock, but I shorted calls. My cost basis is somewhere in the 230s, I think. So I'm sitting on a nice profit on the stock. I shorted calls. So those calls are going to be significantly less valuable today. So I may actually just buy back those calls and take a profit on that. On my gold trade, gold, I am still just sitting in this one. I've had a lot of stuff that is just a wait and see kind of week for me. With gold, I am looking to see if we can get some sort of higher low. We are testing currently, guys, a level of support. If you're a gold trader, you're watching the 4-hour chart or the 1-hour chart, you're sitting at a pretty interesting level right around here. You've got a key area of support, 4-hour level of demand. We'll see if gold can hold this area. In fact, what I'm going to do, just so I can see this a little bit better, it's a cool little trick. If you're a trading view junkie like myself, right click this, visibility on intervals, current interval only. Okay, ready? I just changed somebody's life. Now, if I go to the 4-hour chart, I don't see that, right? So what I could do here, you ready? I could go here and I say, I want this visual order or visibility to be current interval only, current interval only, and then 4-hour chart, current interval only. Did I mess something up? Am I missing something? Hold on. Okay, nope. So check this out. So you can actually go and do your chart markups based on time frame using TradingView. It's so cool. So if I'm on TradingView, this 4-hour zone, look, it won't show up on the daily. See that? So when it comes to gold, we're sitting at a level of past resistance, breaking out, coming back into this area. Let's see if bulls can hold this. I do the same. It helps keep the chart less cluttered. AACA, I'll take a look at that in just a little bit. I'm not going to do, I may need to check on that. I'll write it down and dev team will look at it. Okay. Thank you for that. We'll take a look at that soon. So gold hitting a support level. We'll see what happens here. As a person with a long position currently, how am I managing this trade? Well, I'm watching this level that we just got done discussing. On the daily chart, I would love if we can see that area hold. I mean, I guess this is kind of a daily support level too, right? You have a clear level of what was resistance getting tested at this time. So today, what I'm looking for is I am looking for a bounce on gold. Now, if we do not get a bounce, if we fail to move higher, And in fact, we actually come down to this area, 33.20. I'll continue to hold gold. But if we break this level and stop out, I'm going to take profits and just call it a small win. Right. Nick, are you still holding your Euro CAD long position? Hey, Edward. Yeah, I took profits on it yesterday. I closed that one out and took, I think it was like 45 pips in like an hour and a half, and I just closed it. I just took profit on it. I already have a couple CAD trades open, so I was just like, you know what? I'll just take my win quick and then move on. So thought process on gold, watching it today to see what the reaction is. Now, here's a question that may get asked. When would I trail this stop loss? When is it time to say, oh, yep, I'm going to move it up? So when it comes to trailing stops for me, it's very much like, okay, I want to hold trades and let them run if they want to. And I want to be extra careful not to stunt a trade's potential. It would be a mistake, in my view, to tighten up my stop really tight on gold, because if I really think gold is going to make the move that I'm looking for, like these types of trades are account changing trades for me. Like when I catch those moves, the risk to reward is absolutely phenomenal. And I did catch this move. I'm proud to say I don't catch everything, and I'm certainly not perfect in my trading, but I caught the majority of this move, like almost perfectly. I took the trade around this area. I trailed out and ended up being, one of my biggest winners this year. And so the reason I say that is that if I had trailed too tightly, I might have gotten kicked out of the trade. So I don't like to trail my stop super tight. In fact, what I like to do instead is I like to keep it kind of loose. So I'm looking today, like give me this higher low. Otherwise, I'm just going to sit in it. I'm going to wait and see what happens. But gold is choppy. My expectation for gold is back and forth, right? Guys, we got news in just a second. Let me not miss it. We've got unemployment claims coming out in 30 seconds. Has the potential to move several markets. I'm going to switch over so we can see everything at once here. You've got on your screen, you've got NASDAQ, S&P, Dow Jones, indices on the left, gold here. Gold's trending lower here this morning. Dollar index here, oil, Bitcoin, and we've got our breaking news in just a second. So we'll see what happens here with unemployment claims. Again, last couple reports have been trending lower. Let's see if it does the same here. All right, claims numbers should be coming out here in just a moment. No big reaction at this time. Let's see what the numbers is. It's taking its time here. All right, 217K. More jobs data strength. Look at that. 217,000 job claim unemployment claims compared to the forecast at 227. That is yet again, ladies and gentlemen, a beat on economic labor statistics. My goodness. Dow Jones moving lower on that, interestingly. Russell flat. Dow Jones is moving. There might have been some earnings, actually. I should clarify. It is earnings season. So the Dow Jones, these individual indices can be heavily moved based on what's happening with earnings being reported. At the end of the day, long-term, stocks move based on corporate earnings. And so, big shocks to earnings can cause substantial index level moves occasionally. Anyway, stocks pretty flat here this morning, not too strong in either direction. Oil is rebounding a little bit. Love to see it. I'm long on oil. Gold, no change. Russell, dollar index slightly stronger here. That makes sense. Let's take a look again. So 217,000 jobs, jobless claims. That is about a 10,000 less than expected. That's pretty good. And the reason I think this is especially important, guys, is that we have had a trend here in labor statistics that many analysts have not been forecasting. Let me show you what I mean by that. So here's a quick way to read this chart. The unemployment claims here in the United States, the red dot is your forecast. For a little bit there, it was starting to look a little bit rocky. And myself included, I was saying, hey, we might be getting 3 rate cuts. We might be cutting interest rates in July. And, here's the thing about markets, they're very difficult to predict. And so is economic data. So when we were seeing that, I was thinking, okay, we might, if you got a couple more, had we seen unemployment claims do this, I think we would have seen cuts in July. I think that would have swayed the Fed into the direction of labor statistics are weakening. We need to cut rates. Now, look at the labor data. Unemployment claims trending down is a positive sign to the economy, and it looks like the economy is okay. At the end of the day, jobs are so important. When people are employed, they spend money, they buy houses, they buy cars, they go on trips. The consumer is the economy. They're so important. And so if you have unemployment claims declining, it's a positive thing. And so this is more good data that suggests that the US economy is just fine. All the freaking out that people did this year, this is not people will make it political. Oh, Trump is making this economy great again, or people will say Trump is going to ruin the economy, and leave it to the door. Throw that out the window. We're here to trade. We're here to make money. Forget it. Don't let your politics get in the way. We have an economy that is holding up pretty well. Is that all Trump's fault that it's good or bad? No. The economy is bigger than one person, including the president. I've said that many times on the channel. Jobless claims are trending lower. Interest rates are expected to come down. Inflation is cooling. GDP forecasts look strong, right? Here's GDP growth projections for the US. Ready? Look at this. Growth projections. Q2, yes, it's lower, minus 0.5%. Oh no, look at the forecast. We're projecting Q3 to grow by 1% in the US. Q4, 2.1% growth expectations for the US GDP. Look ahead. The economy is expected to continue to powerhouse. One thing you can say about the US economy, it is the most resilient economy on planet Earth that I've seen, that in this time. I have been shocked, and I think I know many economic forecasters out there have been shocked too by the resiliency of the U.S. economy. You throw a COVID pandemic at it, you throw global inflation, you throw wars, you throw all these things at it, and yet still the U.S. economy continues to lead the way and stay so strong. So when I look at these projections, I say, look, the U.S. economy, it's not about Trump's doing a good job or Trump's doing a bad job. Let that go from your trading analysis. Look at the economy. Are things doing well? Are things doing poorly? People are getting jobs. People are employed. Inflation is coming down. There is also a ton of fiscal stimulus expected from the administration. Those are good things for the stock market and good for things for the economy, at least in the short run. Long term, piling on more national debt could be a problem, but the gamble, maybe the educated guess is a polite way of saying it, that the Trump administration is trying for is they want to stoke the heck out of the economy and the stock market in the efforts that we can outgrow our debt. If you take student debt, for example, right? Lee, great point. The Israeli stock market is outperforming its peers despite wars going on in the region. It can baffle people because intuitively it doesn't make sense at first glance. It does make sense when Israel is like a tech powerhouse of companies, just like the U.S. Again, I'm not super. I don't have a strong political stance on that at all. But I'm just pointing out that markets can be very confusing to people. It can be very weird at first glance. But let's just take an example really quick. The idea about national debt in the United States, the current administration has an interesting play. They're very pro-business, very pro-growth. Now, obviously, every administration is pro-growth. Everybody wants the economy to grow. Nobody wants it to hurt. But when I say pro-growth, what I mean by that is their idea is spend a lot of money in the hopes, and it is a hope, it's not a guarantee, that our earnings, our growth as a country dwarfs the added debt that we add. Debt to GDP. That is what we're talking about. Will they be able to do it? Let's hope, but we don't know, right? I don't know. I certainly do not know. Maybe you guys know more than I do about that. If the administration is successful in growing and massively dominating AI and the stock market runs and all this stuff happens, could we theoretically outgrow our debt? Yep, we could, but we also could not. And that could be a very costly mistake as well. If you get less earnings and more national debt, or less growth and more national debt, then you are in a troublesome position. So big beautiful bill, you know, it is a risk. Is it a calculated risk? Maybe. Depends who you ask. But one thing's for sure, it is fiscal stimulus. And you guys know, if you watch my videos, I talk about indices all the time. Keep your eye on the stimulus. More stimulus from the Fed or from the government or from CapEx spending, which we're going to talk about in a second. Those are all things that are positive for stocks. Stocks just love when money's getting thrown around. They love it. Whether it's the Trump administration, whether it's Powell and co, whether it's companies themselves. So let me tell you about that part, because I think most people here are familiar. Okay, rate cuts, that's stimulant to the stock market. That's lower borrowing costs, good for stocks. The administration going to spend money here, spend money there. That's great for stocks. It's just spending that goes into corporate, earnings. And but that third thing, CapEx spending, what is that all about? Check it out. So Google reported their earnings today. I know not everybody here trades stocks. Bear with me for a second. When we look at Google, Alphabet, they reiterated yesterday that they plan on spending $85 billion on AI build out. Where's that money going? Anybody heard of NVIDIA or AMD or all these companies that are AI, picks and shovels sellers? Look, here's the thing. $85 billion. This is not the government. This is not the Fed. This is a company, a beast of a company. One of my favorite stocks, by the way, not financial advice. Google is spending a bunch of money on AI, and that CapEx spending, companies essentially ponying up a huge amount of money. And this is not the only company. There's many companies that are doing this. That money's going to get flooded all through the market. So to me, you ask me, Nick, are you bullish on indices? My answer should be pretty clear. I am very bullish and have been. Was I too early to getting bullish? Yes. But I have been very bullish. I bought a lot of stocks this year on the dip, and I do think that they can continue to power higher. Now, personally, in terms of adding new shares, adding new positions, or getting long indices, I've got to be disciplined and wait for pullbacks. But I am very bullish. I think that you have stimulus in multiple areas: the administration, the Fed, and companies themselves spending and pouring money into investment into AI. I mean, this is, to me, it is a bullish environment that can continue to run for a while, right? But we don't want to ignore our technicals. We don't want to ignore sentiment. This is where we kind of string it all together. We bring it back and we say, look, pullbacks are a prerequisite for me to get more long in indices. For existing positions, like for me, I own Google, I own NVIDIA, I own all these individual stocks. I'll be talking more about that on my second YouTube channel, Trader Nick Stocks. If you don't follow me there, highly recommended that you join me over there. Today, I'll be going over Google's earnings report and Tesla's earnings report and Chipotle's earnings report. All three came out yesterday evening. So I'll do some coverage on that channel about that. So let's talk a little bit more about the dollar here. Part of the reason that as a longer term play, I do think that the dollar will eventually rebound is because of what I just got done talking about, my bullishness on the US in terms of a bigger picture trend. We have the strongest companies and a very pro-innovation and capitalist society that has been very strong for many decades. I think that the US dollar remains strong. In the meantime, it's been very weak off the idea that, rate cuts are coming, some instability with trade, all that. But I think that the big picture for the dollar is eventually to move higher. I just don't want to try and time that, so I have not been trying to. I have a short position on the pound against the US dollar. It is a very small one with willingness to add to it. If we get a push up into the upper limits here, I may look to add a second short position on my British pound against the US dollar short trade. Is the Edge Finder still giving the British pound against the US dollar a bearish setup? It is. It's giving us a -5 currently on the Edge Finder's top setups indicator. Let's take a look at the top setups eco page. This is stripping out everything except for economic data, specifically growth metrics, inflation metrics, and labor statistics on how it impacts each asset or currency respectively. The Edge Finder automatically sorts it all, generates a watch list, and keeps things really simple for me. What I'm going to look here for is I'm just going to look at major currency pairs, and you can see that the British pound against the US dollar, if we're just looking at the majors, the US dollar crosses, we have dollar CAD on top, so bullish USD CAD and bearish pound dollar. I'm already in a pound dollar short, which is a dollar long proxy. If I look at dollar CAD coming down into this level of support, I'd like to see some sort of a rounding out of this move here. I'd love to see something like this. This would be a little bit more attractive to me. We've been in sort of a straight up downtrend for a while. I would love to see, before I pile on longs on the dollar, I want to see some reversals. I want to see some strength out of the dollar first. I'm not a person that particularly needs to catch the bottom on a trade per se. I would like to see some proven, demand, some accumulation of the dollar before jumping into longs. Would love to see really some breakouts. So can you analyze Bitcoin and ETH? Yeah, let's look at Bitcoin. Bitcoin still range bound up here. We've been sideways. Looks like a little bit of a bull flag, to be honest. Risk to reward would be more attractive to me if we were to get a pullback down to 110. But I've seen this pattern, a million times. I'm sure you guys have too. This idea oftentimes resolves into continued pumping higher in a bull, really strong bullish trend like this. Not a trade that I personally would take. I would like to see kind of an exhaustion or a pullback in this bigger picture move, especially if it lined up nicely here. I mean, to me, this trade just makes more sense. The idea of like a pullback into a support level on a big picture. I like the idea of waiting for that a little bit more. Nick, what's your take on the DAX? Yeah, let's look at the DAX. So DAX, in terms of, let's do top setup simple. DAX is a bullish rating on the Edge Finder. This is another one where I am interested, but waiting for pullbacks. So DAX for me would be a possible trade if we were to get a pullback into this major area of support around 23,300. However, we've also got some really strong support that has found its way right here. So I may actually take a small initial attempt on the DAX if we were to get a pullback into this level of support. We found buyers here once, twice, really sharp move higher yesterday on some of the announcement of Japan and the US making a deal. I think that spread, that good news spread to Europe, because it sort of set groundworks and framework for Europe and US to make a deal. And I've heard, ideas thrown around, but I think Japan got somewhere around 15% on tariffs. So I think Europe is potentially going to move in the same direction. And, the reason the market's not down a whole bunch and has knocked out the all-time highs several times in a row here recently, I think it's because the market's perfectly fine with 15%. They're like, oh yeah, we can survive that. That's no big deal. It was the, 145% on China, those crazy numbers that were scaring the market. 15%, markets can adjust to that. I think that is the resolve. That is the thought process for, participants, is just to say, okay, well, we are not getting the really high tariff levels. We are just getting, 15%. Those are doable tariffs. And in some ways is very advantageous to the US, who can kind of hold the consumer that they have. They can dangle it in front of, countries that have been making substantial amounts of money from the trade deficit. They can kind of get their way with some of the trade deals, which seems to sort of be happening. It's definitely not the massive demands that Trump initially set out with, but maybe that is part of the whole art of the deal stuff, right? Ask for a huge amount and then settle somewhere that's still good, and we'll see. But I think that when it comes to the DAX, right, I'm a buyer on pullbacks. I think that foreign stocks can do really well. I continue to like the DAX. I like the Nikkei. Let's look at the Nikkei. Nikkei didn't give much of a pullback here. I'm interested if we were to get a pullback. I said that yesterday, so I'm watching it. I'm watching international indices quite a bit. I do like U.S. indices. They're just very stretched, so I can't do anything with them at this time. Gold's pulling back. Like I said, watching the support level to see what happens today. If we can bounce, especially if we can take out the previous high, then this would be an attractive opportunity for me to trail stops further, lock something in. But as we sit here at, we hit that all-time high in terms of a closing level, and then we sort of just reversed off of it. So sellers coming in here, but in the context of a longer-term uptrend. Lee says, when you say markets are forward-looking, how far ahead is that in terms of time? That's a good question. I think that my guess is like 3 months, 3 to 6 months. Once you get past like 6 months, it's so hard to predict what's going to happen. I mean, this is why markets make big moves and swings back and forth. Think about it. Markets make big swings back and forth because the future is unknown and it's really, really difficult to predict. If the market was super predictable, there wouldn't be big swings in price action. The unpredictable nature of it is what makes markets move. And so when we talk about something, like, hey, if everything kind of stays as is, the market should continue to move higher. Well, the challenge is that things change and something happens and something changes, and, another round of Trump tweets come out and the market freaks out, or inflation starts to rise, or something happens in the Middle East that causes oil prices to skyrocket, and that throws a wrench in the inflation story, right? These things are what make markets risky, is the uncertainty of the future just in this world, right? We live in a world that is unpredictable. There's a lot of things that just you can't possibly predict. Markets historically have rewarded calculated risk taking. I say calculated because if you take too much risk or leverage yourself too heavily, you can very quickly blow up. But if you have think about this. If you had taken calculated risk, buying the NASDAQ, which is a risky asset, if you had stepped up and taken calculated risk without a bunch of leverage, you've done incredibly well, right? You essentially got paid to take the risk. If you were long the NASDAQ, buying dips, trading it, whatever. So yeah, that is, you get in this market historically, And this is not guaranteed to happen in the future, but historically speaking, you get rewarded to take risk. So yeah. Okay, guys, in just a second, I believe we have Marco coming up next. It says here we've got Marco at 9, but then my schedule ends at 8:45. So Marco, are you good to go? You want to give me a thumbs up if you're good? Just give me okay, cool. Marco is up next here in just a second. We're going to pass the stream over to him. If you guys have not heard from Marco before, he just posted a video of him on a boat that we enjoyed at the office. It was awesome. And now I want to go on a boat. So in just a second, we're going to toss the stream over to Marco. Before I do that, let me just remind everybody, if you have not picked up a copy of the Edge Finder, the sale is ending. We're doing our biggest sale of the year right now. Edge Finder is currently 45% off. You can get access to all of our top setup screeners, the index screener, gold and silver scanners, commodity scanner, Forex scanner, institutional positioning through the commitment of traders data tools that we have, the market sentiment tools like the put to call ratio, retail sentiment, AAII investor sentiment surveys, Bitcoin to gold ratio, seasonality, economic heat maps, the UK, US, EU, Japan. We have all of this data here. If you are somebody who is interested in bringing fundamental analysis and sentiment analysis into your trading, but lack the tools to do so, that is why we are in business. A1 Trading builds that stuff for the average trader at home. Last thing I'll say about that is sometimes people are like, I love the Edge Finder, I want it, but it's too expensive for me at this time. So we're offering 45% off, which is our biggest discount that we do all year, but we are also offering to split up the cost into up to 3 payments to make it easier for people who need to do that. So if you want some details about that, if you're like, okay, let me hear about that offer, let me hear about the deal, here's what we can do. In the chat right now, I'm going to drop a link here. Chat with us here. Boom. Send us a direct message. Use this link. Let them know you're watching the stream and that you heard about the payment plan option if that's something that you need. But don't miss the sale because it is the lowest price that we do on the Edge Finder all year long for our summer sale event. So there you go. Okay, guys, in just a second, I'm going to pass over the stream to our next show host. Of course, it is Marco from Marco's Trading Journey, going through some charts with you guys in just a second. I'll also drop the link to his YouTube channel while he's streaming so you guys can check him out and subscribe to him there. Okay. Up next, we've got Marco. Stay tuned. Hey, stream viewers. If you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. If you have any questions, any chart requests, psychology questions, strategy questions, I have the comment section open on the side. So before that, let me show you what I personally have on the watch list for today. I have a couple of things. We're gonna start with the metals. So let's do silver and let's do gold. I do have a buy trade running on silver. So it has been running from the 24th of June. I got in when we got this very nice breakout. I was kind of counting on first the tariff drama to possibly escalate. And if the tariff drama escalates, so if there are no trade deals, then the risk of assets could gain some value. Risk of assets being silver and gold, for example. Also, I liked silver even more than gold because gold already had a massive move up. So gold already exploded to the upside, while silver was kind of lagging behind, as you can see. So silver was a bit lagging behind, and it was stuck in this flat range on the daily chart. And then we finally got a breakout to the upside, after which I looked for a little bit of a pullback, and then I got in on the 1 hour chart with a simple liquidity sweep entry. So the actual entry is not that important. What was most important is I also got a bullish reading on the edge finder at this time as well. And as I mentioned, the macroeconomic situation with Trump, with trade wars, with the tariffs, with trade deals, it was all sort of not going as planned. So the deadline was extended. No one really knew if there was going to be more trade deals or if there was going to be very high tariffs. So gold and silver actually gained some value. And here you can see that silver gained even more value than gold. So yeah, right now it's running around 2.8 R. My stop loss is currently underneath this swing low on the daily chart. So the game plan is to just keep trailing this position. And I'm betting on the overall uptrend to continue. So yeah, just going to continue trailing it. And we will see what will happen. So let me check the comments. Hey, hello, guys. Sahil says, hey, Marco, if I trade multiple pairs on the daily time frame, then what should I take risk per trade as a prop trader? I would say it's all about what you're comfortable with. But if you're trading on the daily chart, I have had multiple examples where I took an initial stab. It was a loss. And then probably the second or the third attempt went in my direction. For example, on the DAX, I can show you, is my initial entry was on the 16th of June. That was a loss. And then my second attempt on the 8th of July or the 7th of July ended up in some nice or ended up currently running in profit. Maybe this can also stop me out, but this can also continue up and be a nice reward to risk trade. So because of that, I would probably recommend that you maybe risk 0.5% per trade. That's what I'm currently doing in most cases. Some of these trades are 1% risk, but I think a very smart way to go about this is to maybe risk 0.5% per trade. So if your first trade is a loss, you can get in on a second, maybe even on a third attempt. So that means your total loss ends up being around 1% or maybe 1.5%. So that's I would say the smart way to go about it, especially if you're trading, let's say, prop firms, that you give yourself the highest probabilities for your trade to work and for your setup to also go in the direction that you plan. Because again, throughout this whole price action, I was bullish. So it's very hard to time an entry exactly right. It's very hard to have your initial entry be the correct one. But if your overall analysis on the daily chart, if fundamentals, macroeconomics, sentiment, if all of that is still bullish, then why not take another trade and try to get in on the good market conditions? Okay, so you guys want to see gold. That is coming up next. What is the similarity between silver and gold? Both of them are metals. Both of them are risk of assets. Gold is usually the leader. Silver follows. I would say it's a pretty similar story with what you have, for example, on Bitcoin and Ethereum. Bitcoin is the leader. Ethereum is the follower. Bitcoin usually moves first. Then you get the altcoin season, and then Ethereum moves. US 30, okay. GBP Aussie. Can you explain your strategy? Pozdrav iz Istre. Pozdrav iz Jadranova. The Dow. So Hill says, thanks, Marco. No worries. So let's do gold, and then we're going to do the requests that you guys have. Gold, I'm in a trade. It's running in a little bit of profit right here, like 0.8 R. So I took this trade on my prop firm accounts, not on my personal account, because on my prop firm accounts, I want to take more trades. I want to place a bit more risk, as I want to pass phase one, pass phase two a bit more quickly. So I want to be a bit more aggressive. That's why I'm taking more trades, more positions, more risk on the prop firm accounts, especially on the challenge phases where your goal is to hit 10% and then hit 5%, for example, 2 phases. That's FTMO. So took this gold trade. I was again betting on the whole tariff drama to continue. I was betting on no trade deals. I was betting on Trump going through with the tariffs, and then gold should go up in value. Right now, it's not looking the best. We had a potential trade deal with the US and Japan yesterday, and we also had a potential trade deal with the European Union and the United States. So both of those things are good for a risk-on environment, but bad for a risk-off environment. That's why, for example, yesterday, the DAX, which is the German stock market, had a big move up on the daily chart. Very, very, very bullish move on the daily chart yesterday. And gold was moving lower. See, with the news of new trade deals, gold usually loses value. So not looking the best right now, but this could also be, I think Nick is in the same trade, and what he says, what I also agree with, is this is a nice hedge against risk-on positions. And I did have a New Zealand yen long, which is a risk-on position. I have a German DAX trade long. That's a risk-on position. I'm looking for buy setups on the NASDAQ. I have a long-term investment in the S&P 500 and in Bitcoin. All of those things that I mentioned are actually risk-on trades. So having a small gold position on my prop firm accounts, I would say it's a smart idea. If this trade loses, most of my other risk-on trades will probably be in some nice profits. So I would say this is a sort of an insurance against any crisis that happens, or if a trade deal falls through, or if Trump comes out with enormous tariffs against specific countries. Right now, it's running, as I mentioned, in a little bit of profit. I'm going to trail this position. So if this does go up, I'm going to keep trailing this position. I think the daily chart, the daily uptrend is still intact. The trend line is getting respected, so it's looking pretty nice. We could go back to the trend line and bounce off of that. If I had to give you a bias, am I bullish, neutral, or bearish on gold? I would say I'm maybe slightly bullish, actually, because technical analysis is looking very strong. Again, this trend line, the trend line just keeps getting respected. So I would say there is a high chance that overall we're gonna move to the upside. We just don't know when. We could range around here for the next few weeks, maybe even next few months. I've seen gold range for quite a while, so that could happen. But I do think eventually, because of such a strong uptrend, we should break out to the upside. Okay. So yeah. And in terms of macroeconomics, yes, we are getting trade deals, but again, we may still get some more drama. We may still get some high tariffs. We may get a crazy Trump tweet in the future. It's not yet completely done. So we will see. We will still see what will happen on that front. Okay. Marco, what's your favorable risk to reward ratio as a swing trader on the daily time frame? So I have two strategies. The first strategy, which is purely technical analysis, 1 hour chart, no news, no indicators. It's an average of a 4-to-1 reward to risk. That has an average of a 4-to-1. But this one, in terms of my back testing and forward testing, it's around 1.8-to-1. The strategy that I'm currently talking about and currently showing you on the daily chart, that is heavily dependent on fundamental analysis and macroeconomics. That's 1.8-to-1. And I would say that's pretty healthy. Anything that's above a 1.2 is pretty healthy, and as long as you have like a 50% win rate, you're gonna make money. What I don't like is I don't like negative reward to risk. I know some scalpers, they do like negative reward to risk because their win rate is very high. I personally don't see a lot of success in that sort of strategy. So now let's go through the requests. So you guys want to see the Dow and you guys want to see the pound Aussie, if I'm not mistaken. Let's see. Yeah, pound Aussie. So let's do the Dow Jones and let's do the pound Aussie, and then we're going to do the S&P 500. I also saw that, and it's a very important thing to cover. So US 30. I was looking for buy setups on the US 30, and I was looking for buy setups in this area. The reason I was looking for buy setups was fundamentals were bullish, and also the Dow Jones was not yet near the all-time highs. So the Nasdaq and the S&P 500 already had a massive push, but the Dow Jones was lagging a little bit. When this happened, I removed the Dow Jones from my personal watch list, because then we already had a huge move to the upside where we are already very close to the all-time highs, and I don't really want to get in at this level. I think this level could be a significant level of resistance, especially because in the very short term, I'm a little bit bearish on the things like the Nasdaq, on the things like the S&P 500, because I'm looking for pullbacks. So it's the same thing on the Dow Jones. So if you combine those two things, first one being that we are stuck at a very significant resistance level, second thing being that on the US indices, I think a slight pause is coming, a slight pullback could come. I'm being a little bit more patient. So what I think is going to happen, short term, a bit of a retrace, long term, we continue up. That's my analysis. So a bit of a pullback, possibly if we move down to these levels, I will consider buy setups, maybe. I would prefer to get into the Nasdaq, to be honest, but I'm watching the Dow Jones as well. So we could hit this support level and then overall continue moving to the upside. That is my personal bias. Also, we could get a little bit of DXY strength, the dollar index. We had this move to the upside, which then we had a pause, but we could see this go up a little bit more, right? And if the dollar gains a bit more value, especially if the rate cuts for 2025 get postponed for 2026. So, for example, the Fed comes out and says we're not going to do any cuts this year, the dollar will for sure gain some value, okay? So that's what I'm seeing on the Dow. Now, pound Aussie, let's see, GBP, AUD. For the pound Aussie, let me quickly check on the Edge Finder. So I'm not going to open the Edge Finder on the screen because then it's a bit complicated, but I'm going to search it up quickly to see what is the bias. Let's see, GBP, AUD. And if you guys want to check out the Edge Finder, it's currently, I think, a sale running at a 45% off. So definitely check it out. Pound Aussie neutral bias right now. So fundamentals look to be neutral. Technical analysis, I would say this is very range bound. What I would maybe look to play is trading it inside of this range if that is something you're interested. But again, without a clear fundamental bias, I would be patient. So if I had, for example, a bullish bias, I would probably try to get in on a small buy setup right here at this level of support with a stop loss like this, aiming for the highs, because this seems to be ranging around. Currencies often trade in a mean reversion fashion, meaning assets like gold, assets like the Nasdaq, they tend to go up over time, but currencies, they tend to mean revert. So they tend to trend overall or trade overall in sort of a flat range. If you zoom out really far, like the weekly chart, you're going to see there's no clear direction, right? It's all being traded alongside of this mean, if that makes sense. So getting back to the daily chart, I would say I'm neutral. I would say we could just continue ranging around here. I don't see a clear uptrend, nor do I see a clear downtrend. I would be waiting for a clear fundamental bias. And with a nice bullish fundamental bias, you could definitely buy the lows of the range. That would be an interesting trade to play. Okay, next one is going to be the S&P 500. And we're going to do the NASDAQ as well. S&P 500, I'm bullish. Fundamentals are bullish. Again, US economy is doing great. You have the artificial intelligence revolution, which is definitely making US companies even more profitable. It's improving profit margins. For example, Microsoft fired like 5% of its worldwide employees, I believe, because they can replace those workers with artificial intelligence and save a lot of money. Now, is that the best thing for those workers? Of course, it's not, but it's the realistic picture of how the market is moving, and that will for sure, or we will see that phenomenon happen on even more US companies. So as they keep developing artificial intelligence, they will be firing even more workers and improving their profit margins, so improving the prices of their stocks, and the S&P 500 should go up even more. So yeah, AI is definitely pushing the markets up. US as an economy is doing pretty well if you're looking at employment data, inflation data, GDP data. It's all looking very healthy. And currently for 2025, 2 rate cuts are expected. 2 rate cuts are expected, which is bullish for the S&P 500, but bearish for the US dollar, which definitely should make S&P 500 go up. Another thing, you have the big, beautiful bill from Trump, which is going to increase the US debt by a lot of money, a lot of dollars. And that also increases the spending, that also expands the economy, and also makes the valuations of US companies go to the upside. So you have multiple factors, multiple confluences for the S&P 500 to go up. Would I be looking for buy setups at this level? I personally would not. I would personally be waiting for a pullback. Where would that pullback be sufficient? You could say this level of support, but I would go maybe a bit lower to this one, right? So maybe here and here. You can take an initial buy position at this level of support. If that fails, if that turns out to be a loss, then go a bit lower and try to get in a bit lower. Okay, so that's my game plan, but I would prefer to get in the NASDAQ. The reason is the artificial intelligence revolution is going to be the most prominent for the technology companies. And as we know, NASDAQ is top 100 US technology companies, Apple, Nvidia, and basically companies like that. So top 100 US technology companies, Microsoft, and they're all using artificial intelligence to improve their profit margins and raise the valuation of their company. So I think a pullback on the NASDAQ is going to be very good if it happens. I mean, I've been hunting for a buy setup ever since we got this candle. So from the 12th of May, I've been looking for buy setups, but we never got a pullback that was big enough or sufficient enough for me to be happy to get in on a buy setup. So I've been trying to hunt for a nice entry. I just never got a big enough pullback. One thing I would not like to do is get in straight on the top. I think that's not the smartest way to trade because, again, you're not getting a good risk to reward. Your stop loss needs to be pretty big, and your take profit, you're not sure where you're going to be able to, let's say, trail the stop loss or have your take profit. So much better to get in like this, for example, on a pullback. If you're just gauging the momentum, just pure momentum, we seem to be slowing down a little bit. So we seem to be breaking the highs and retracing. That is a telltale sign that we are slowing down a little bit, that the bullish pressure is getting exhausted, that the buyers may not have a lot more power to push the prices higher. So that's another sign that a possible exhaustion, a possible pause, a possible pullback may happen. So that is the game plan for me. I do have the NASDAQ on my watch list for the fundamental strategy. I'm looking for a pullback. If a pullback does happen, I'll be very interested to look for buy setups. So long term, I'm very, very bullish on the US stock market. Okay. Let's see. So S&P 500 we covered. Sahil says, Marco, what is achievable to make 20 to 25% per year as a swing trader on daily? If yes, how can I do this? Give us a roadmap. I think 20 to 25% is achievable as a trader. I think that's a really healthy number. That definitely beats the S&P 500 on a sample size of, let's say, 10 to 15 years. So if you can beat the S&P 500 as a trader, you're definitely doing something right, because most hedge funds cannot beat the S&P 500. When you add in all of the fees, when you add in all of the commissions, most of them underperform the S&P 500, which is really interesting. So I think it's achievable, but it's a lot harder than people believe. But it's also a lot more realistic than making, let's say, 80 to 100% per year, which a lot of online trading scammers would like you to believe that you can make 80 to 100% per year. That is impossible in the long run. The best trader in the world made, I think, in the last 30 years, he made like 60% per year. The average return was 60% per year. So the best trader in the world is making 60% per year on average on a sample size. I think it was 20 to 30 years. I need to check up on the study again. But yeah, if that guy, I think it's Jim Simmons, if he is making 60% per year, then your regular online scammer guru definitely cannot make 80 to 100% per year every single year. So 20 to 25% definitely achievable. A roadmap would be developing a strategy, definitely knowing if you want a swing strategy or a scalp strategy. I think a swing strategy on the daily chart is a lot easier to implement and research, and it's a lot easier on your psychology, and you can have a full-time job while you're trading. Again, you can have a full-time job that covers your monthly expenses, which then relieves the pressure of needing to make money every single week to cover your expenses. That is very important. I would suggest for any new trader to not even think about quitting their job, but actually trying to implement their trading with their full-time job, because those traders that quit their job and then rely solely on trading income to cover their monthly expenses, after a few months, they are just done and their psychology is a mess, and they're probably working that same old job, but they have definitely stopped trading because they think it's impossible. It's actually possible, but you need to have a steady source of income every month and then trade alongside of that, at least in the beginning. So yeah, definitely check out Trader Nick or check out my channel, Marco's Trading Journey. You can see how we are trading. You can try to implement that. Again, daily chart, swing trading, fundamentals, macroeconomic analysis. And then you need to do back testing, but you also need to do forward testing. How much forward testing? I would say 3 to 6 months is kind of the minimum. Forward testing means executing the strategy in live market conditions, but on a demo account or with very, very small risk. So forward testing, I would say, is extremely important. A roadmap would be follow Trader Nick, follow myself, see how we are trading, start trading a similar strategy, start trading in a similar fashion, start forward testing with very small risk, let's say 0.01 lot per trade, and see how you go. If in 3 months you get some steady profits, you can then start putting in real money, or you can look at prop firms to expand your capital. USD yen. Okay, let's check out USD yen. USD JPY. For the USD yen, it's looking pretty flat. Let me check the fundamentals on the Edge Finder, USD JPY. So neutral. We are getting a neutral reading on the edge finder, and I would say it makes sense with the chart. I mean, the chart on the daily looks flat. The bias on the edge finder is neutral, so it makes sense. I'm currently having a definite neutral bias. I would expect the price to be stuck in this range for now until we get a specific catalyst. As far as catalysts go, I'm talking about possible rate cuts. I'm talking about a possible pause in rate cuts, meaning no rate cuts. I'm talking about trade wars. I'm talking about a crisis like Israel and Iran, or maybe something happens in Japan. I know they just had their elections, and there were some very interesting developments in those elections. I don't closely follow the Japanese economy, but that could also be a catalyst for the yen to gain or lose value. I think what could happen is, but I'm not 100% sure. I need to do more research on this. I think the new leader could basically increase the spending, right? Could increase the spending in Japan, which makes the yen lose value and makes the Japanese economy expand, for example. So that could be a potential catalyst for this chart to go to the upside as the US dollar gains value and the yen loses value because of increased government spending in Japan. So don't quote me on that because I'm not 100% sure what happened in those elections, but that is an example of a possible catalyst. Right now, my bias is neutral because every indicator and every chart is telling me, or the daily chart is telling me it's flat. Okay, GBP USD, Euro USD, Aussie Swiss. Sure, let's do GBP USD and let's do also Euro USD. GBP USD on the daily. Well, overall, I think we're going to continue going up, to be honest. I think I saw the edge finder reading was a bit bearish at one point, but I personally would say it's still bearish, actually. But I personally would say that overall, this should continue going to the upside. We are sort of respecting this trend line. Now we have fallen a little bit below it. So we have broken this trend line. We will see. We will see. I would not be a seller in this market. Just my personal opinion. I know the edge finder is bearish, but I still have not seen the evidence that I want to go short. Okay, I still have not seen the evidence. I would need to see one more large bearish leg to look for sell setups. Right now, my bias is overall neutral because the chart is looking, to be honest, bullish in my opinion, and the fundamentals or the edge finder reading is bearish. That gives me a neutral reading overall, and that makes me be more patient on this particular currency pair. So until we break this key level of support with a lot of selling pressure and get the sell entry, I will be more patient. I cannot do much, especially this week. I don't think we have a lot of news this week. I think this week is already has been very quiet and will continue to be kind of quiet. We did have the major news this week was the trade deals. Again, potential trade deal from US and Japan and potential trade deal from US and EU. That's definitely market moving. As far as scheduled news events go, we didn't have much this week. We have a Fed meeting that's coming up. That should definitely be interesting. So pound dollar, euro dollar. I'm bullish on the euro dollar. Quickly check the edge finder, euro USD. Getting a bullish reading, that's good. I may consider getting in on buy setups. To be honest, Europe's economy is doing pretty well. Now with the trade deal, the euro should definitely gain value as the DAX has gained value, right? So we could see this chart go to the upside. Technicals on the daily chart look very bullish. We're respecting the trend line. Pound dollar looks worse. Okay, pound dollar definitely looks worse than the euro dollar. For me to consider some buy setups, to be honest, well, I'm expecting a little bit of dollar strength in the short term. But once that clears up, once we get more clarity on possible rate cuts, I think I could be pretty happy buying the euro dollar. So if Fed does stay on the path of 2 rate cuts for 2025, I think buying the euro dollar should be a pretty high probability trade. So I like this, and I think I'm going to consider getting in on some buy setups, especially if also the edge finder continues to give me a nice bullish reading here. Okay, so that's euro dollar. I'm bullish, and I would be looking for buy setups. So thank you for putting it in the chat and notifying me. Okay. So fact, Marco, so true. Jim Simmons, yeah, it was Jim Simmons, was a mathematical genius, one of the greatest traders of all time. He averaged 60%. A trader would be doing remarkable to achieve just half of that return on average. Yeah, absolutely. So, I mean, the best of the best of the best of investors and traders of all time, Jim Simmons made 60% in, I think, 20 or 30 years. So it's going to be extremely hard to beat that number. And that also tells you how many scammers and fake traders are online telling you can make 80 to 100% very easily. So you cannot. Okay, no worries, Gerald. GPN dollar index. We also had a request of Aussie Swiss. And I think we're going to do Aussie Swiss and maybe one more chart, and that will be about it. So Aussie Swiss. Aussie Swiss, let me quickly check the edge finder for the Aussie Swiss. I don't think we're going to get a clear bias. Okay, actually a bearish bias on the edge finder. The daily looks a bit flat, but in the short term, a bit bearish, kind of moving below the 20 MA. Would I be looking to sell the Aussie Swiss? I don't think so. Not really. Not really my cup of tea. We had this massive sell-off, and then we kind of had an ascending into a descending channel. So I would be a bit more patient on the Aussie Swiss. Edgefinder is giving a bearish reading, but it's like a -6. If we get like a -9, -10, a very bearish reading, then that might be a bit more powerful. I think there are some better opportunities out there for me personally. So for the Aussie Swiss, overall, I'm a little bit more neutral to slightly bearish, but I'm not bearish enough to look for sell setups. I think the euro dollar is a much better play to buy. Okay, if you want to get my opinion of which currency right now looks the best to buy or sell, I think euro dollar looks great to buy. So that was for the Aussie Swiss. Let's see. So when is Powell going to resign? Never. He's not going to resign. He's not going to get fired by Trump. That would be crazy. Trump would, basically the opposite effect would happen. The interest rates would maybe go a little bit lower, but the selling of bonds, because people would lose confidence in the United States and in the current administration, that would be devastating for Trump and company. So he's definitely not going to fire Powell. Powell is not going to resign, and it's all gonna work out in the end. Okay, so I believe it's all smoke and mirrors, and it's all just threats, crazy tweets, huge tariffs, and then Trump goes back on his word, and then in the end everything turns out to be okay. So Powell is gonna stay at the Fed as long as his term lasts. I'm not sure when his term expires, but so no rate cuts. Look, so far we have 2 rate cuts priced in. Okay, for 2025 we still have 2 rate cuts priced in. If something changes, we're gonna see it. So far we're just seeing 2 rate cuts. We need to wait for the next meeting at the end of July. That's gonna be important, and I'm gonna be closely watching it. So it's not about Powell. It's, I think, 12 participants of the Fed. So the Fed consists of 12 people that vote for rate cuts, rate hikes, or keeping the rate neutral. And Powell is just one of them, right? So you have some hawkish members, some dovish members. They all get together, they vote, and then you get a decision. That's about it from me. My time has expired. Thank you guys very much for watching. If you guys have any questions, you can go to my YouTube channel and ask me in the comments or join my free Discord. I will see you guys next week on Thursday, and I think now it is time for Miko to take over. So see you guys.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.